Extremely interesting. I want to show you very quickly the current fluctuations. WTI is trading $37 per barrel, which is down by almost 4%. Brent as well, 3.66% lower. And I just want to remind everyone that Saudi Arabia's Aramco, the world's top oil exporter, cut the October official selling prices for its Arab light crude. So this had major impact on crude oil fluctuations, no doubt about it. But what is behind all of these movements? We're going to ask to Yousef Alshammari, CEO of Sea Markets. Good morning, Yousef, and thank you for joining us.
Hello, Alex. Good afternoon.
Yousef, I'd like to kick off with how to interpret this decision of Saudi Aramco.
As we have seen last week, Saudi Aramco has slashed its crude oil prices going to Asia by about $1.4 to $1.5. In a sign of sluggish demand growth, as we saw also in the custom data coming from China, showing that the Chinese crude oil imports have been going down over the past 3 consecutive months. Actually in June, the crude oil imports in China were around 13 million barrels, going down to about 12 million barrels, and then down again to about 11 million barrels in August. Between June and August. So as we also know that the end of the driving season is coming by the end of August, and that, of course, the crude oil global demand is still at around 92 million barrels, where the aviation is still for at least 40 to 60% below its pre-crisis levels. And I think that this is how we interpret the mood of Saudi Aramco to slash its crude oil product in a time of low demand.
In this case, what kind of price fluctuations can we imagine? Because certainly the movements in the past few days are important. We do have 4.20% lower when we talk about a WTI right now, and almost 3.81% when we talk about a Brent. So what kind of price ranges can we imagine? Can we imagine something bigger, or this is going to be more or less?
Well, what currently in the market is a kind of a bearish sentiments and concerns surrounding the growth in demand. Although we have also seen a rebound in the dollar price, or the dollar index, from 92 to about 93 over the past couple of days. So that has contributed to the decline in oil prices that we have seen. As I just mentioned, the end of the driving season has been a factor. There has also been a decline in the refinery runs in the U.S. Over the past week by about 800,000 barrels a day. Also, the growth in demand is not expected to come back to its pre-crisis levels in 2020. And I believe that's the major reasons why we are seeing the price decline that we have seen now. Another important factor is that OPEC Plus has raised its production in August. So we have now an increase in supplies coming from OPEC Plus, despite the high compliance figures coming from Iraq and Nigeria at about 140% for Iraq in August compliance, and Nigeria of about 130%, 130% in August. Yet there is still a net increase in the supplies, and I believe that these are all the factors that are currently surrounding the markets, possibly. And I believe if prices continue on their downwards, then there is an upcoming OPEC Plus meeting coming up in September the 17th, and I believe possibly OPEC could take a move to deepen the cuts in the by the end of 2020.
In fact, Russia instead wants the opposite scenario. What do you think is the correct movement at this point?
Yeah, I understand the Russian situation. Russia needs a crude barrel of about $41. Also, Russia doesn't want the price to be so high, otherwise it will trigger the rebound in the U.S. shale oil. Currently, the U.S. shale oil is at lowest levels since actually it's boomed back in 2014. Now it's crude oil is about the U.S. oil production is about 9.5 million barrels a day. So it's quite a major decline. Looking just into, of course, the Laura hurricane has contributed to that factor. So that's how I interpret the Russian move. Although I don't think this is the right decision at this time, because demand growth is still fragile, and we don't want to see, although still the oil inventories are quite high at nearly about 500 million barrels in the U.S. Chinese inventories are also quite high, so I don't think this is the right time to increase production from whether from OPEC Plus or from non-OPEC.
And how much of a factor is the Chinese economic recovery for the crude oil price and specifically for demand?
Well, China has been a major contributor to price recovery. And as I just mentioned, demand in China has been at about 14 million barrels back in June, or in July, although not even different from June. So this has been a major factor in the market's recovery that we have seen, giving the doubling the price that we saw from less than $20 to more than $40. So it was fueled mainly by the Chinese economic growth. China PMI has risen to about 53 in August, up from 52.8, and it's the highest monthly growth since 2011. So I believe China will continue to be a major factor to the oil market recovery. Yet China has also got its own problems. Currently, its inventories are quite high, and they are willing to export their inventories of refined petroleum products to the global markets. They are willing to export it to India, yet there is currently a conflict. As you know, the geopolitical border dispute between China and India would make it harder for China to sell petroleum products to India. So where can they sell their products? I believe it would be difficult at this time, and that could lead to reducing the Chinese imports by the end of 2020, giving also it's also already a period of low demand season.
Yousef, I'd like to talk about the industry as a whole. We do see different articles, different scoops regarding the Exxon, which is another U.S. major that had a lot of problems in the past few months. We did see also a lot of U.S. majors cutting dividends, which has been something really exceptional so far. So I was wondering, since we did read the Reuters report that actually says that Exxon might make deep cuts to its staff and projects, when do you see a full recovery for these companies, or do you believe there is going to be this full recovery, or all of them should shift to green kind of energies? Like actually we did see already some important movements from many giants like BP and even Saudi Aramco.
Now the global economy is still suffers from the COVID-19 impact on all global companies, on the financial sectors, aviation, tourism. Most of the economic sectors are still affected by the COVID-19 crisis, not just the oil industry. I believe the oil industry will be on a path to recovery, yet how long could that take? Maybe 1-2 years or more. That's highly uncertain, and that's mainly dependent on the rebounding demand for oil to its pre-crisis levels, combined with the price recovery. I strongly believe that oil companies would need certainly to diversify to green energy, especially their green energy portfolio. Also, we have seen some oil companies actually reducing or writing down their petroleum assets due to the expected low price environment that they expect to be sustained over the next 20 years. So I think the bottom answer in here is that we need, number one, to have a rebounding in crude oil demand, a restoration of economic activity, and only after that we can see that the global economy would have an impact on the performance of oil companies and all other sectors associated with the energy industry.
All right, thank you very much. Yousef Alshammari, CEO, C Markets. Thank you for joining us. Have a great day, Yousef.